All right, everyone, if you're ready to begin. My name is Neil Pollard. I'm a senior fellow at the Atlantic Council with their Cyber Statecraft Initiative, and I'd like to take this opportunity to welcome everyone to our Cyber Risk Wednesday. This is a program that's part of the larger Cyber Statecraft Initiative that this series is funded by Zurich Insurance Group. And what we do is we gather to have, on Wednesdays obviously, to have sessions where you have the opportunity to talk to panelists from government, from industry, from the research sector on how cyber risks are aggregating and affecting the specific industries or specific organizations that they work with. So today we're of course going to be going to walk through perspectives from both industry and government on risks and resilience for the financial sector. Again, I do want to welcome you to the Atlantic Council and acknowledge the sponsors of this program, Zurich Insurance Group, who's been a very generous sponsor of the Cyber Statecraft Initiative, and especially our research effort to understand how risks aggregate across a variety of different levels and combine to affect areas in critical infrastructure in business and in government. So we're joined today by three distinguished panelists. As I said, my name is Neil Pollard. In addition to being a senior fellow at the Atlantic Council, my day job, the less fun part of my day, is I'm a director at PricewaterhouseCoopers for their advisory practice. I work in the forensic technology solutions. So we do investigations of cybercrime, economic espionage. Whenever a client has been hacked, we'll go in and do investigations. The bulk of our investigations are for clients in the financial services sector. We're joined today by, starting to my left, Mr. John Carlson. He is Executive Vice President of Technology Risk at BITS Financial Services Roundtable. The Technology Risk Program includes cybersecurity in collaboration with U.S. government agencies and other associations such as the Financial Services Sector Coordinating Council. He was Managing Director at Morgan Stanley, focused on supplier risk management, new product approval, environmental risk, and standardization of board-approved policies. He's also served his time in government in the Office of the Controller of the Currency. Serving time isn't right. Okay. I think a lot of us have served time for the state. He's worked for the Office of the Controller of the Currency, U.S. Office of Management and Budget, the Federal Reserve Bank of Boston, and the UN Center for Human Settlements. To his left is Mr. Brian Peretti. He's the Acting Director of the Office of Critical Infrastructure Protection and Compliance Policy in the United States Department of the Treasury. He is also still serving in government, still serving his time. He hasn't completed his sentence yet. His job is supervising the planning, evaluating, and implementation of information security, information assurance, and risk management policies related to critical infrastructure protection, cybersecurity, and homeland security at Department of Treasury. He also leads the efforts of the Financial and Banking Information Infrastructure Committee, which is an interagency organization chartered under the President's Working Group for Financial Markets and composed of 18 federal and state financial regulatory agencies. And to his left is Ms. Lily Thomas. She is Vice President and Regulatory Counsel of the Independent Community Bankers of America. Before joining ICBA, she served as Assistant General Counsel, Federal Compliance Counsel, and Director of Compliance Operations for the Credit Union National Association. She was also previously Manager of Member Services for the Congressional Federal Credit Union. So, those are our panelists today. I'd like you to join me in welcoming them, and we're just going to dive right into questions. The structure of today is I'm going to spend a little bit of time talking about four specific areas on how risks and threats are affecting the financial services industry. And I'm going to ask our panelists to comment on their perspectives, both in their previous or current time in government, but also from their perspective of industry, on how these risks are affecting the financial services industry, what the losses are, what the threats are that are generating these losses. Then finally, what can be done about it, what is being done about it, and what we might aim for in the future to develop a better risk management posture against specific threats. We're going to go through a conversation for about 45 minutes or so, and then I'd like to turn it over to the audience for you to have the opportunity to ask questions and engage our panelists in question and in conversation and even debate. First, I'd like to go from the perspective of each panelist's background, experience, both in government and in industry, and as representatives of industry trying to stem losses from specific threats. Can you characterize from your perspective what is the threat space? What is the cyber environment? Not necessarily from a technology perspective, but from the knowledge that behind every hack or behind every risk is either a failure of a human or a malicious intent of a human that is trying to do something bad or allowing something bad to happen. So from your perspective, what is the cyber risk environment, and how specifically is it affecting? Is it making an impact on the financial services sector? And let's, if we can, give some specific anecdotes that really brings home what these risks are and the damage they're causing.
Okay. You want me to start?
Please, John, start.
Okay, great. Well, thank you for inviting me to attend this session and talk with you all today. I think from where I sit in working in an association that represents large financial services companies is that we've seen a migration of the cyber environment from going to fraud, which has always been an issue in financial services in terms of that's where fraudsters go after to trick customers, to steal information, to steal money. We've seen that migrate to disruptive type of attacks through either hacktivists or even nation-state-backed activities such as the distributed denial of service attacks that were headline news several years ago, to even the data breaches, which over the past several months has been another area of headline news, in particular with attacks on major retailers and merchants. So we're seeing a significant impact on the industry in terms of the reputational risk. We're not seeing huge impact in terms of significant losses to organizations because mainly financial services companies have very good controls that they've built up and invested in over time to mitigate these types of risks. So the problem right now is really around reputational risk, impact on brands, but down the road there's a growing concern about cyber attacks that could change information, could cause into question the integrity of the data, which could really lead to disruptive market implications and concerns between counterparties. And that's an area we really don't ever want to get to. So that's why we are working really closely within the financial services community and in partnership with government agencies to try to solve this as a community, as a non-competitive issue, as something that we need to come together and collaborate in order to share information about threats and vulnerabilities, and at the end of the day, to protect customers, to protect information, and to protect critical infrastructure.
So that brings up an interesting point. One of the hurdles to information sharing, whether it's real or at least perceived, has been the anti-competitive nature of it, or perhaps there's a competitive edge in not sharing information. You hinted, but are you seeing a real sea change in mentality where people are starting to realize in the private sector there is no competitive edge in squirreling away the information, refusing to share information, and in fact there is a competitive incentive to share the information. Are you seeing a mind shift toward that?
I think we've certainly seen that over the past several years. Within financial services, security and cyber issues have really become a non-competitive issue. That's not necessarily the case in the IT community more broadly, with security firms that are competing very aggressively for marketing products and services, but within financial services, there is a sense that we need to share information, we need to collaborate. So even if you just look at it as an example, our Information Sharing and Analysis Center, which was established in 1998, it now has 4,500 members. We've seen that growth over the past several years in particular. And within that community, we've also seen a tremendous increase in the amount of information sharing within financial institutions, among financial institutions, but also in partnership with the government and particularly the office that Brian leads, to share information from government sources, from other critical infrastructure sectors. So those are all really positive developments as we move down this road towards a community-based solution.
And that's a good list of best practices, or at least leading practices. So something I'd like to come back to when we get to the topic of what's next, what can we do, is how do we take the lessons, the best practices, the experiences, and the observations that there's not a competitive edge here from the financial services sector, and how might that be more broadly applied to information sharing across industry. But before that, you made mention of Brian's efforts in Treasury. Brian, from your perspective, which is on a very...
Can I pass to Lily first?
Certainly.
Because I think that might be better to then talk about what we're doing overall. So.
Okay.
Oh, about our current environment.
Current environment and how the risks are manifesting themselves and how you see them actually impacting the financial services industry.
Well, I have a little bit of a different perspective than John does, and I agree with where the cyber threats are coming from and how they've evolved and how they've become more sophisticated. But our association represents smaller institutions, small community banks, and from our perspective, there is a financial threat and there is a financial loss on our side, even though the breach didn't occur with the institution. And that is what we're seeing as growing. We're seeing more and more costs being borne by the the financial institution for breaches that are occurring, like John mentioned with the recent retail breaches. And just to give you an example of this most recent breach, our community banks had reissued over 4 million debit and credit cards at a cost of over $40 million. And that's a huge percentage of the type of assets that these small community banks have. So that, as much as we protect the information internally and with the financial institution, when there's a breach that we can't control, the costs are borne by the financial institution. So I did want to add that to John's current, the current threat.
Okay. So from the government perspective, Lily made a good point about how a lot of these risks are presenting themselves upstream in the infrastructure, whether it's in retail or even infrastructure. What can be done, and what are you seeing in the government side?
So the reason why I wanted Lily to go first before me, because we have to, Treasury is the sector-specific agency for the banking and finance sector. And we have to be able to figure out how we're going to develop things to be able to assist both the large institutions and the small ones. And they're coming at this from two different areas to a large extent. Because larger institutions may be able to defend themselves to some extent, but they need information to be able to do that. The smaller ones, we have to tailor product more toward those institutions so they can readily adapt that with a smaller IT staff or threat posture. So, we have to kind of look at these across the board and figure out how we can be able to get whatever is most beneficial to the firms to be able to help them protect themselves while understanding not all threats are inside their institutions. So you have situations in which outside organizations will pose a risk to firms that have to be addressed by the firm itself. So, cost externalities to a large extent. How do we develop that? So what we try to do from our side is to listen to what industry has to say. Large, small, whether they're equities firms, insurance firms, banking firms, whoever it is within our sector, and then see how we can assist them in the best way possible. Some of that is direct information sharing. So as threats come about, we try to be able to push that out to the institutions as quickly as possible. Some of it is listening to the firms to say what they may need some technical assistance on. So there may be some areas where we can provide some unique government assets or information that be able to help them in a better way. So for example, it may be helping develop best practices. It may be looking to other ways to be able to help them configure their systems better. Some of it is also in spaces where they may not have the information. So are there other pieces of government who have developed some tactics or techniques that'll be helpful to be able to be given over to the firms directly to help them in that posture? We see that threats are going on all the time. I mean, it's not surprising to anybody in any financial institution they've been attacked. I mean, people have been robbing banks for a couple hundred years. This is a new way to be able to allow the bad guy to be able to do stuff. And how do they be able to defend themselves against that? But of course, we have to think that the other key is that we can make banks very difficult to be able to intrude against, but that's not going to be very helpful, right? Banks have to be forward-facing and public-facing because that's the way in which they're organized. They want to be able to provide best service to their customer base and be able to deliver it in a way which is going to be very easy for their customers to be able to participate in that environment to be able to make their transactions, whether it's bill pay, whether it's be able to purchase whatever they need to buy from through their accounts. So how do we balance this customer experience to be able to give more security to the transaction, to be able to reduce fraud, while at the same time being able to make it a valuable customer experience where customers want to be able to come back. And so that's the typical dynamic we have to kind of deal with on a daily basis, getting the best information, helping them make themselves more secure while balancing that real customer interface.
So I want to keep pulling on that thread, and I want to go to the question of what is industry doing in response to these risks right now. But Brian, I'd like to start with you because you've kind of taken us down that path a little bit already. From your perspective as a leader in a sector-specific agency, have you seen these ideas starting to really get traction in the industry from your perspective? Where do you see industry is really taking up, and where do you see industry pulling threads on what seem to be really effective measures, which you've laid out a list of them?
So I guess the key for all this stuff is really, to a large extent, information sharing. We know financial institutions are going to be attacked by bad guys periodically. But the way in which it works now, in the past, of course, it was easy. You had brick and mortar facilities. Somebody would try to rob your bank. You would see that. You could pass that information around to everybody else, and they'll be able to know to be able to do whatever defenses they had to do. In the cyber realm, it's a little different because you may not know you're being attacked yet. You may not see that the intrusions are coming or that you're even being targeted. And so what we try to do at that point is to be able to see how we can better help information sharing between institutions. So if you just look to government for us to be able to tell you how the next attack is going to come, that's probably not going to be overly effective to a large extent because we don't see all the attacks that come on. So most institutions, all institutions have defenses that are set up, and periodically they see people pinging them or trying to intrude or create other havoc within their institution. So what we try to do is foster an environment in which those institutions share that information across the board to other institutions to be able to make sure that they can see what the potential next attack is going to be and they can protect themselves. So as I was saying, if you're robbing a bank, you may have a lot of concentration of bank robberies, say in Washington, D.C., but that really wouldn't be helpful for a bank in Seattle because bad guys can't get there with guns to be able to do that stuff. However, in the cyber environment, it's totally different. You can try to rob a bank in D.C. today and Seattle just a few minutes later. And how do we make sure that those institutions understand what's going on and we have the mechanisms to be able to share the best information about these potential intrusions and hopefully be able to provide some tactics and techniques that can be used by the organizations to defend themselves. And that may be where we can provide some additional value add from government as folks are being attacked. Those institutions develop their own stuff, but perhaps we can share or at least develop some better information to be able to push forward to other institutions to defend themselves against the same things. So this whole information sharing environment in which firms share with each other when attacks are coming against them is really kind of something that we're working really hard to make sure firms feel comfortable doing that and be able to get the information across.
So Lily, continuing on the theme of information sharing and mechanisms that would facilitate that, we'll get into a little bit about what the government's doing and some of the new standards that are coming down here, but somebody's observed that, for example, a recent standard that was released by NIST, the National Institutes for Standards and Technologies, there's a new cyber framework. One person observed that the differences on how these frameworks are adopted won't be primarily differing financial services sector versus oil and gas versus some other sector, but the differences will be on large organizations, whether they're banks or energy companies or whatever, and the mid-level, the smaller market organizations. From your perspective and the organizations you work a lot with, can you comment on where you've seen these concepts and mechanisms for information sharing really take hold and where you think there are opportunities for additional help or additional guidance from the government or from larger institutions?
Yeah, from a smaller institution perspective, I think that Brian hit the nail right on the head, that information sharing is probably the key to combating a lot of these threats because a lot of times, or what we're seeing is that the smaller institutions aren't necessarily targeted because they're not the large institutions that are very public or visible, and they tend to be more local. So they're not the ones that are going to be targeted and hit necessarily, but that doesn't necessarily mean that it's not going to trickle down to the community institutions. So we do see that information sharing is a big thing that we're working on at this point to help the smaller institutions combat this. As far as the NIST framework, and I know we're going to get more into that, but I don't necessarily see that changing that much for the smaller institution. They already have a lot of standards in place to secure financial information, and they, as do all the financial services sector. But where we do see help with the government is getting involved in the Financial Services Sector Coordinating Council, the FSIC and the FSISAC, where these types of collaboration are being worked on. So you guys can add to that if you
And John,
want.
yeah,
I would,
please.
I would add to that. So I think one thing that's very important to underscore is that, at least for financial services, our industry is very heavily regulated, probably the most heavily regulated of all industries, and specific requirements around data security, business continuity, vendor management, It's very deep, and if you look at all of the requirements, I mean, it's like a binder like this thick in terms of all the requirements and supervisory guidance. So that's something that's a little bit unique within financial services. And not only do you have those requirements, but you have examiners from multiple agencies go out and examine institutions and pass judgments as to whether or not they're adequate or inadequate, and mandate that firms make improvements to their systems. I think the other piece I want to underscore is that in response to the increasing cyber threat, the financial services sector has really worked much more closely together. So Lily had mentioned our Sector Coordinating Council, the FISIC, that was established shortly after the September 11th, 2001 attacks as a way for the industry to work much more closely together around being better, more resilient. Over time, it's become much more focused on cybersecurity related issues. That group works in partnership with a government group that Brian's agency serves as a chair called the FIBIC, which is comprised of all of the regulatory agencies, and they also work closely with law enforcement and Homeland Security Department. So that creates this community that has been established, bolstered by the Information Sharing and Analysis Center, which is the utility for the type of information sharing that we're talking about. But on top of that, in the past year and about a half, we have also come together to work much more closely and more coordinated at the association level to focus on 5 major initiatives. Improving information sharing, we've already talked about here. Second is improving analytics around trying to understand what does this information tell us? What are the trends? What are the issues that we need to be focusing on, that we should put better controls into place, et cetera. The third is around enhancing crisis management response and resiliency. So actually through our Sector Coordinating Council, we have developed playbooks around how we'll respond to major events, whether it's a Hurricane Sandy that occurred a while ago, or in response to these major distributed denial of service attacks. And then we actually exercise those. We do multiple simulations and practice it throughout the year. The fourth is around improving components of the ecosystem, mainly through research and development. So let me give you at least 2 examples of that. We are in the middle of right now a partnership between my organization and the American Bankers Association to petition to ICANN, which is the body that oversees the names and numbers of the internet, to try to secure .bank and .insurance, because ICANN has a process in place to basically open up the .com world to a very large number of new top-level domain names. We want to secure at least those 2 top-level domain names to provide greater security and resiliency requirements around those that are using those, and hopefully to serve as a platform for future innovation to have more secure, more resilient internet. So that's just one example of how we're pursuing that. Some of our other sister organizations, like the Clearinghouse, actually has an initiative to try to secure the payments channel through tokenization. So those are 2 examples of where individual associations are taking a leadership role to try to strengthen the internet. And then the last piece of it is around improving executive communication and advocacy. So we have, as I mentioned earlier, this has now become a CEO level issue, and mainly around issues concerning brands and resiliency and critical infrastructure. It also is driven in part by regulatory requirements. The Securities and Exchange Commission issued some time ago requirements for publicly traded companies to report material cybersecurity events. So that obviously puts the onus on the CEOs to be involved in making those judgments. But as part of that, we've actually worked with the Treasury Department fairly closely in convening both classified level briefings, because some of us have been granted classified level clearances, and also unclassified level briefings to bring in very senior level executives to talk about the changing risk environment, how to work well with the government in response to major events, and to raise that general level of awareness. We're also using that as a way to also educate members of Congress about the importance of new legislation that we think is necessary in order to improve information sharing, to invest more in research and development, and to give our law enforcement agencies better tools to investigate crime and to deal with the international aspects, which invariably cybercrime is international, and you have to incorporate that into the mix.
Okay, and I want to stay on this issue of regulatory or other possible controls and what can be done to minimize the impact of some of these risks. Both you and Lily and even Brian have touched a little bit on the upstream risks. So a piece of your infrastructure gets hacked, and that introduces the risk into your system. So even though you may be a financial institution subjected to all this regulation and imposing the appropriate controls, there are still providers further and further upstream. In one of the retail hacks, it was reported that an HVAC provider, air conditioning fix-it man, introduced the risk into their stream. Of course, the further upstream you go in outsourcing some functions can result in business economics or business efficiency and save money. And it's very difficult to look a CFO in the face and say, no, sir, we should not be saving money. But what that does is it puts your level of controls, it puts these risks outside your level of controls. So my question, and this will also, I'd like to talk to John and Lily first, but then go to Brian in terms of where can you extend the requirement of controls or otherwise find an alternative to regulation that doesn't reach very far beyond your industry into your upstream infrastructure providers? Where is the private sector finding ways to work around the fact that the regulations and controls you're being held to do not fleet down further upstream, but when the risks land further upstream, they still vector right into your systems?
You want to start?
I can start, yeah. That's a loaded question, but from a private sector or for a private industry perspective, there is the PCI controls, which correct me if I'm wrong, but it's a contractual obligation between all those in the payments system network where they have to abide by certain controls and securities. And we also have the Visa and MasterCard networks that put in rules in place that require anyone that uses their payment system to follow certain controls. From a regulatory standpoint and from a community bank perspective, there are some controls in place and there's regulatory guidance that does require financial institutions to manage and oversee any third parties that they contract out to deal with any of these processes. And for a small institution, that does become a little tricky because you have the regulators on one hand putting forth standards and guidances that you need to abide by, but as a small institution, you really don't have that much pull or weight when you talk to a vendor to say change this or change that, or it becomes very costly. Every time there's a new threat and you need to change the process, it's not in-house and you go out and there's a charge and going forward. So it puts smaller institutions a little bit in between this rock and a hard place when it comes to managing the third parties and the vendors when it comes to payments, because they do want to keep the securities very tight and they do want to keep controls on it. And when there are new threats that come in that they need to go to their vendor to try to fix, they could either come up with vendors that refuse to do it because it's just a small institution, or it becomes very costly.
And I would also add to that, so within the regulated part of the financial services community, there are requirements that date back to the 1960s in terms of the regulators do have authority to examine major service providers, which they do through a program that the banking regulators conduct called it's the FFIEC's MDPS program. In addition to that, the regulators have been very clear over many years to state, even if you outsource, you still retain responsibility. So there's a lot of very detailed requirements around how do you oversee third-party providers. So you can't absolve yourself saying that I have a third party that's doing this on my behalf, I'm not responsible. The regulators have said very clearly it is your responsibility. And that's where you've seen some of the regulatory agencies step up in the past few years to really enforce some of those vendor management requirements and also to issue additional supervisory guidance out there. In addition to that, some of the market utilities are actually overseen by some of the regulatory agencies. The Federal Reserve plays a role in that space in terms of overseeing Organizations like Depository Trusts and Clearing Corporation, the Securities and Exchange Commission also has some roles in terms of overseeing some of the big market providers. So there is oversight around how do you deal with all these major either market utilities or third-party providers, at least in our industry. I think where we've had some challenges is with innovation and with new providers that are entering the space, whether they're cloud-based providers, whether they're social media companies, other types of entities, is those types of parties are much more difficult for individual financial institutions to vendor manage in the traditional sense. And even the regulators have acknowledged this in some of their issuances around, what are your responsibilities with social media companies, or how do you oversee cloud providers? But they have been clear in saying, at least with respect to both of those, that they are really part of your vendor management program. So you're seeing definitely a strong signal from the regulators that vendor management's important. We're going to be looking at your programs. We need to make sure you're overseeing these risks properly.
Okay. And then, Brian, I want to turn this to you for this, the same basic points, but also want to highlight something that you certainly know a lot about, which is the new NIST framework and also the guidance that was given to the sector-specific agencies in the executive order last year that mandated the creation of the network, which is the creation of the framework, which is go off and figure out how this can be incorporated into existing regulations. What are your perspectives on how some of these challenges can be addressed and where you see the opportunities of using the NIST framework or anything else the government's been doing?
So to give you some background, so the NIST framework was required under the President's Executive Order 13636 in February of last year. And it asked NIST to be able to create a framework that could be used across sectors to be able to help improve cybersecurity. The way in which NIST went about is the way NIST goes about creating all their documents, which they asked for a lot of public sector input and private sector input. And so what they did was they held 5 sessions across the country to be able to get a lot of input from organizations across the different sectors. We also coordinated, I think it was 3 or 4 with the PHYSIC, several with the FIBIC, to be able to make sure there was some good input tied into these documents. So it'll be something that will actually be helpful to the sector and also across sectors, as opposed to some folks just deciding to create what they think would be helpful. And so the framework is really, at the end of the day, a document that should be able to be used by firms, taken by firms, to increase their cybersecurity posture. One of the things we looked to do as this was going through is making sure that the framework, as it went through, was not something that was going to conflict with the current regulatory structure of the financial sector. And so that's why we had lots of input from the regulators into this to make sure it was something that could actually be used without upsetting the current things that were already being done within the sector. Now, financial sector firms are very sophisticated, I think, to a large extent tied to cybersecurity. They spent a lot of time and effort into this area. We're not sure necessarily how much beneficial this may be for firms in and of themselves, because we hope a lot of them already have really well and robust programs. However, if you don't have a robust program or you're not sure how to do this, the framework is really a good way to be able to organize your thoughts around it. And there's really 5 core principles, and I think I got these all right. There's identify, protect, detect, defend, and recover. And so what those 5 areas are really a way to be able to organize your cybersecurity posture and to think about it yourself. Do you have efforts within your organization to look at all 5 of these areas and really be able to have mechanisms in there, either tied to standards or other risk management techniques, to be able to make sure you're thinking about it in this way? As we look from our own way to be able to talk about how we talk to the sector, we're starting to frame our issues tied around these 5 things. So instead of us just saying we're going to have a new work stream, we look to see, does it match one of these categories or several of these categories? And is it going to be able to show at the end of the whatever work stream we have something that makes the sector better or more secure? So if it can't fit into one of these buckets, we probably shouldn't be doing it unless we have a very strong reason to kind of do this, do an effort. So we've heard from firms that many firms are trying to figure out how best to incorporate this and use it within their own organizations. So, do they already have a mechanism? Is this something to help them kind of think about it a little bit differently internally? What we've also heard from firms is now they're going to be using this as they start to evaluate organizations outside of themselves. So their supply chain. So lots of firms are not able to look at all the organizations who supply product to them. We've heard some firms, in the 10s to 20s or 30,000 outside vendors they have, and they probably don't have an ability to go and inspect each of them independently while they're going forward. But is this a way for them to be able to at least take a first cut when they're looking at new vendors? And do the vendors have robust programs around all 5 of these areas? If they have, then maybe you have a little more confidence in them that they're going to be secure, at least from the cyberspace. You still need to make sure whatever product they're delivering is helpful and something you want to purchase. But this could be one of the criteria that's being used to be able to see whether or not your vendors, who at the end of the day, if they fail, the reputation risk falls probably much more on yourself, because your customers are going to call and complain to you, as opposed to calling and complaining to whoever the vendor is. So do they have robust mechanisms around all these 5 areas to be able to make sure that they are secure and can continue on? I mean, if a vendor does not have a way to be able to identify what's important within their stream, one of those suppliers that they have then somehow fails, well, you're not going to be able to be getting that product, which is going to cause you concern. Or say in the event that there's a problem that causes them to fail at some point and they have to recover from it. Or do they have the mechanisms already created to be able to recover so that you can continue to get get whatever you're trying to get from that supplier in the event of a failure on their side? So how do you firms are looking to see how is this going to be helpful within their risk management programs tied to their outside vendors? Because it is important within firms to be able to understand how to manage these connections and these contacts, especially in the area of cybersecurity. So we think at the end of the day, the framework, which is something that is really a large extent, while directed by the president for us to develop it, is really a document for industry and with the input that came into it really by industry, to be able to see if this is the way it has to be done in the way that's going to be most advantageous. On the other hand, if it's not working, we're going to be trying to get feedback from firms out there to see how can the NIST framework be made better. As any of you worked with NIST documents before, you see they're not static. As new information comes up, they're more than happy to incorporate these into the documents and be able to make continuing variations of it going forward to make something that's going to be really robust and secure and helpful, as opposed to just another standard that sits on a shelf. And the other key thing about the framework is that it's not a standard document to a large extent. It's a framework in which standards can hang from those in all these 5 core categories. So you don't have to comply. It's not telling you in order to be secure in the recovery aspect that you must comply with these 5 or 6 different standards. They're just saying, look at this as a framework. What are you doing in this space? Are you following industry best practices or standards based upon whatever those standards are? And are your vendors and everybody else who's going to be using this complying with that, so that you can evaluate yourself and determine how best to go forward with it?
So one of the points you made earlier, all 3 of the panelists have made earlier, is information sharing. Both the NIST framework and the guiding executive order emphasize the importance of information sharing. And that's been something we haven't seen any successful movement on Capitol Hill for more legislative drivers. But in addition to calls for information sharing, the government has had a few models of information sharing, some fairly specific to defense, like the Defense Industrial Base, DIB Cyber Pilot, the Enduring Security Framework. Brian, do you see any other initiatives that the government might be able to put forward, or what does the near-term future hold for other models or other mechanisms by which public-private partnership and among industries can enjoy the benefits of information sharing?
So I think the way we kind of look at this is to figure out, we listen to industry and ask them, what are the key pieces of information that will be helpful to be able to give to you to be able to help make yourselves more secure? Firms have shown a large willingness, once the discussions have been engaged, to share information going forward. I guess at one point in the past, there was a situation in which banks operate independently and never had to connect to anybody else. I don't know when that would have happened, but perhaps it did exist at some point. But we see that these financial institutions are trading partners with each other, and they have to be able to talk to each other. And it's not a competitive advantage for one institution to be able to work and another one not, because they have to be able to communicate. They may compete on products, but on security, it's not really the issue. And the other area is that you don't want, if somebody is able to poison one bank or somehow cause some kind of a problem at one institution, they can easily see that ripple through the whole chain to be able to cause additional problems. So kind of figuring out how best to be able to encourage this information sharing, which happens across the board all the time, but how do we foster that more, and then be able to provide value from government in there. So perhaps there are some pieces or some nuggets that we can help share out there to be able to make them more secure, just because we have specific information that institutions may not have, but we're not always sure exactly what that is. So instead of us coming out and saying, well, here's a couple of thousand vulnerabilities or something we've seen, what we want to be able to do is enter into a better dialogue so that we make sure that we tailor the information that we're sharing to something that's going to be beneficial. Now that's going to be much different for a small institution who may be running a few systems, and a much larger institution that could be running thousands of systems. And we know that just giving all the information on thousands of systems to a small institution just won't work. First, they'll probably throw up their hands and say, well, we can't do anything with this. This is too much information, and it's not helpful and not targeted. And so as we enter into better conversations with it, of saying, these are the specific types of systems we run or specific types of information that would be helpful, we can help try to figure out how best to get that information over. Some of that may come from us, some of that may come from other financial institutions, some may come from the FSI SAC, some may come from other sectors who are running those same kind of systems. But that's a conversation we have to be able to figure out what are the needs of the organizations, and then how we or other parts of the government or the private sector can help fulfill that void. But us trying to sit around and guess what the system is and then imposing that on the financial sector or any sector really isn't going to be very helpful, because that's not addressing the needs. And we really had to try to focus on a large extent to listen to the needs and then work together to help address those needs. Because cyber is important, financial institutions from our side are important, and we had to make sure that they're secure and strong and robust, and be able to operate in a way which is going to be better for overall.
John?
Yeah, if I could just add to that, I think a number of my member companies, I've also participated in some of these different experiments with information sharing, and it seems to be the attributes that are most successful in these types of information sharing mechanisms, whether they involve government agencies or just create a forum for people within the private sector to talk about risks and threats and that nature, they have to have trust, first and foremost. That is a critical element into this. And you'll even see today a lot of the information sharing occurs between trusted parties that may not even have agreements amongst themselves to protect the information, but they trust one another and they're willing to do that. They're willing to take the risk. The second is very helpful and useful to have some sort of rules or protections around how the information can be used, whether it's non-disclosure agreements, whether it's legal agreements, protections from, if you're exchanging information with the government, from FOIA requests, or even protections from not having to share information to your regulator in order to maintain that sense of trust. Third is around context. What is the information? How is it relevant to your systems, to your environment, to your threats that you're subjected to within your community? And then fourth, and probably most important, particularly in the cyber context, is timeliness. Sometimes we have developed really good information sharing mechanisms, but the information arrives, that too late. So you couldn't put into place the controls to prevent, say, a significant impact from a DDoS attack, or knowing that this is the way a particular adversary is perpetrating some sort of malware attack against an institution or its customers. So having those four elements become incredibly important, and that's why we've advocated for things like the CISPA bill on Capitol Hill that would give some protections around the sharing of information, allow more information sharing between the government to the industry, even information that we don't care about sources and uses. We don't really want to know where it came from. We don't need to have the markers on the intelligence. We just want to know this is what the government's hearing, or this is what other parties are hearing, shields up, or these are the sorts of controls that would be effective in diverting this type of attack. We need to do that in a much more timely manner.
Okay. Lily, from your perspective, where do you see responses and traction in industry in response to the NIST framework? Granted, the NIST version 1.0 has been out for, Valentine's
weeks.
Day, so
Yeah.
6 weeks. So we're not going to see stellar examples of adoption this soon, or at least that's unreasonable. But where do you see points of traction in any of the examples we've been talking about, either in the NIST framework or through information sharing models?
Well, we're not going to see as much from the NIST framework from the small bank perspective, because that does target the critical infrastructures primarily. But with the information sharing, I think John pretty much said everything. That one of the key issues is timeliness of the information and getting it, and that is one thing that the smaller institutions or we're trying to work on with the smaller institutions to get them more informed, because oftentimes they, as I mentioned earlier, they're not necessarily the ones that are targeted, but the trickle-down effect or the effects can hit them, and it's more beneficial to be more proactive, to have the information, have it timely, get the information even from the larger institutions, and that's one of the collaborations that we have been working on, is trying to work with them to get the information and be able to put systems in place to stop it from the smaller institutions.
And there's actually a project that's underway right now through the FSISAC to try to improve and automate the information sharing process through a series of standards that are being developed, so that information that would be coming from, say, one institution, regardless of its size, could then be shared with multiple institutions, including the major service providers that provide critical services to very large proportions of community banks and credit unions, as well as other large financial institutions, so that distribution of the information can be done in an automated way versus what we have today, which is a lot of emails being sent out with organizations struggling with how to respond to that information and patch their systems or make adjustments. So there is work underway that I think will be, once it's implemented, will be immensely helpful in terms of sharing information in a timely manner to a very large proportion of the industry.
And making it more targeted too, as I understand it, be able to get it.
And one of the things we found in the past is that the way in which information sharing is done is actually important. So at one point, information was being sent by PDF files. And while that's very helpful, that would mean somebody would then have to type that into their other systems. And then, of course, there was a potential of mistranslation or typing it the wrong way. And so we found that wasn't really the most advantageous way to do it. And so we kind of worked to be able to figure out how do firms need this information and how's it best to get to them, whether it's through perhaps a Word document that could be cut and paste or some other system, or just machine readable so we can push out faster. But one of the other things that we're looking at also is that within this framework is, what are some good use cases from this document? What is going to be a good way that firms can really kind of digest this and then be able to use it going forward? And so one of the things we're trying to think about is, how can we make some kind of tools that will be very beneficial that firms can use? So whether a small institution who may not actually know how to use it right now because they haven't spent a lot of time and effort, is there a way to be able to make it so that so we can give some type of tool to them that they can then easily and readily be able to bring it into their organization to be able to use that? So instead of you having to become an expert on the 45-page document with all the nuances, perhaps there are some shortcuts that we're seeing based upon use cases that firms have done, or being able to have in conversations directly with smaller firms, see how this can play to fill that niche that's out there, that hunger for information, that this may be able to be beneficial. Because we know if we just send it out to all the institutions out there, a lot of them are just going to say, well, thanks a lot. I have a day job. I don't know really how to use this, and you're not giving me any guidance. And so it's not a regulatory document. It's a framework. And the question is can we help them be able to use that? And so there's some efforts going on within the financial services sector to look at that. But then we also see other sectors are trying to do the same thing to be able to figure out how better to get it to their firms within their sector to make them more secure. Because none of this stuff is just a one-way kind of a drop of information, here you go, and go forward. That's not going to be beneficial. But how do we enter into these conversations? And that if we see that this isn't the right thing, or we need to work on other stuff, or be able to help make some best practices in some area, that should probably be some places where we can spent some good time and valuable effort to really help to address the issue of cybersecurity.
If I could just add something about
Sure.
the NIST framework, because there's a lot that's being written about it right now. And Lily pointed out that it is voluntary, it is meant for critical infrastructure entities, and there's even a definition, that comports with that. But for our sector, we're already covered. So we were very supportive of the NIST framework. We commented on it. We collaborated across the sector. Submitted 2 detailed comment letters. We attended the 5 workshops around the country. We thought NIST did a fantastic job in terms of coordinating the whole effort. We think the end product is very good. But for us, it has no effect other than we think it'll signal to the service provider community this is the common framework that is consistent with what we're being held to from a regulatory side, and that it also sends a signal to innovators that this is what you really need to build your product to. And that's always been a challenge with the innovation culture that we have, particularly in our country, but throughout the world, is it's getting product out to market without really fully testing and dealing with all the security implications. And so we saw that years ago, particularly with Microsoft became kind of a case study. Microsoft then really embraced this notion of software security and life cycle and improving, and they really made it into a science and an art. And that was a huge improvement in terms of dealing with the cyber environment. So we need to continue to move down that road and provide as much incentives as possible for people that are writing code, developing new products, to make sure they're building security and resiliency into those products from the very beginning and not trying to bolt it on afterwards. Because the bolt-on afterwards is so much more difficult and so much more costly to individual organizations, but also really to society overall.
And financial firms are in a really difficult situation to a large extent. Innovation continues to go on. Customers demand more and more. But at the same time, customers also want ease of use. So how do you build in the security in a way in which is going to enhance the customer experience while enhancing security at the same time? And I think this is a challenge a lot for smaller institutions who, the customers, you're competing to a large extent with much larger financial institutions. And they have a unique niche that is out there. And how do they be able to provide those same things that the larger institutions can do, because the demand is going to be so strong on the smaller places. And that's going to be a question for us to be able to see too, is how can we help in this area? So it's not just that every institution fighting for themselves, but we really kind of work together, because the potential vulnerability at a small institution is going to be the same vulnerability at a large institution. And how do we address that in the first place? Because all you do is just create additional defensive measures. Large institutions may be able to do that, but it may be much more beneficial to have it built in the beginning, so that everybody's equally protected, so that you don't have to have a support staff of 10 or 15 to protecting that app or that program, because it's secure in the beginning, and you can have the appropriate level of security there without the additional cost. Because it is a challenge. This isn't easy, but we have to make sure that it's out there, and secure cybersecurity is important.
One last question for all 3 of you, and then I'll turn it over to the group to ask questions and engage in debate with the audience. But what's next? What do we need next? We've talked about some good efforts in both the public and private sector and some successes, but as everyone here knows, certainly on the dais, the pace at which the bad guys, whether they're Carters in Eastern Europe or whoever you're talking about, the pace that they can fleet up the capability curve and become very, very effective is rapidly increasing, both in terms of the effectiveness and the speed at which they can increase their effectiveness. That trend won't dip anytime soon. So from a perspective of legislation or additional regulations, or what sector-specific agencies are going to do next, or even best practices, lessons learned, or technology, what is needed next to keep pace with the capability increase of the bad guys?
I'll start on that one. I think I've learned over many years of being involved in this area that we really need to think about it as continuous improvement. There have been attempts to try to do kind of the big bang approach. Let's do a comprehensive strategy. I think our legislative system has a really hard time digesting kind of the big bang, big comprehensive approach. So let's take it piecemeal. And I think one thing that would be immensely helpful would be to have passage of a bill similar to the CISPA bill that was passed in the House last year, has not really seen any progress in the Senate so far. That way it would provide some greater protections around cyber threat information sharing between the private sector and the government among participants in the private sector. I think if you were to pass that, that would be a very helpful step forward in conjunction with the work that's already being done at the administrative level, the work that Brian's office is doing, DHS, the intelligence community, law enforcement, to continue that process around notification, sharing of information, responding much more effectively to these types of events that are going on. So that's like one area. Second area would be around trying to improve the collaborative model between the telecommunications industry and multiple sectors, but in particular financial services. And we've had a lot of dialogue with the ISPs, and they've noted that they are hamstrung in certain respects because of existing laws that were passed many years ago that aren't really up to date with the current reality. So I think there's some opportunities to work in partnership with the ISPs around things like, shutting down botnets, or notifying computers that have been taken over by botnets that then become sources of attacks. Dealing with malware-related issues, since the networks are the ones that are going to be in a position to monitor that information and understand when malicious traffic potentially could be going across the different networks. So I think if you were to just deal with those two, that would be substantial. The other areas, which we haven't talked about, which we're actually now just beginning a partnership with the major retail associations in conjunction with the major financial associations, is around how do we improve the payment ecosystem around credit cards, debit cards, but also card not present or mobile transactions, which are really growing in significance. And we have an opportunity through that partnership that we announced a few weeks ago to really work much more collaboratively together to improve information sharing, improve technologies, improve adoption of technologies that we've seen have worked in other jurisdictions around the globe, but also think about how do we make this system more effective to really protect customers at the end of the day. And that's really what these institutions are in business to do, to service customers and to protect the customers.
Mm-hmm. Okay.
Just to add to that, I think that we're also looking at some national breach notification laws. Right now, there's just a patchwork of state laws across the country, and as our payment system develops, it's not just state-specific, so it becomes difficult. And so one of the other issues that we're looking at is standardizing the breach notification. And for us personally, we would like to see that costs be borne by the entity that's breached, because right now it's the system is only as strong as the weakest link in the payment system chain. So if the banks really have a very secure system and you have an HVAC guy that can come in and breach a system, the banks end up paying for that cost, and any of the fraud costs or anything is borne primarily by the institution. So we would like to see legislation where the entity that has been breached, if they haven't secured their systems, pay for the losses that go with that. So that's, in addition to everything John said, we're on board, we're on the same page with that.
So I think from my side, what I'm going to try to do over the next months and years is to continue this process of better information sharing. We have to be able to continue to mine this area to be able to figure out how best to be able to develop additional trust between the organizations out there, to be able to make sure that the information is being passed appropriately back and forth, and that people can better defend themselves. Because what we see is that as technology evolves, additional and new threats are always coming into the process. And at one point, somebody asked me, how do you measure progress? And I said that's kind of hard, because I can show how strongly we defended against a previous virus or worm or something like that. But the problem is the next one's on the horizon, and so that's not going to really show. Just looking back doesn't really address this problem. So how do we make sure that we better understand what the threats are? How do we better share that information tied to the threats? And how do we be able to make sure that the mechanisms to share this information are really successful? Because to a large extent, we see that things are always going to be happening out there. I mean, I also do a lot on the physical space. And I know a lot of this has to be done in the recovery aspect for this, because I know I can't stop the next hurricane from coming. There's going to be one at some point. How do we make sure the mechanisms are there to have information flowing back and forth, and that the folks are comfortable that when we fail over to backup systems, that they're still as trustworthy as the primary ones? And so that's going to be a lot of the effort going forward to make sure our response protocols are helpful and useful and done in the way in which we're really going to be able to, at the end of the day, if something were to happen, we would be able to make sure the effort is positive going forward and that we can recover pretty quickly from it.
So at this point, I'd like to turn it over to the floor if there's any questions from the group here. I'd like to ask any of our panelists. Okay, I would ask also all participants to state your name and your affiliation.
Okay, Marcy Wilson.
There's a microphone right next to you.
Thank you, I'm sorry. Marcy Wilson, I'm a graduate student at George Washington University, and I appreciate that this is an international problem. And as we know, like a lot of the issues that we're seeing are coming out of the former Soviet Union, where they're actually doing this in a very, very organized fashion. What's being done with the international banking to discourage this from different countries having this happen? I know that the onesie-twosies are going to be hard to catch, but when you have major groups doing things like this, or the APT issue, what are we looking at to resolve that?
Take that, Brian.
Thanks.
It's more of a government issue, I believe.
Yes.
So to a large extent, I mean, it is to some extent a government issue, and to some extent it's a private sector issue for this stuff. I mean, if you patch your systems, if they're secure enough, to a large extent, you're going to be able to defend against a lot of these threats that are out there. I mean, you can't defend yourself against zero-day threats. We know that because they're zero-day. But we see a lot of bad guys out there using well-known vulnerabilities that patches exist out there sometimes for months at a time, and systems just aren't being patched. And so one of the things we're trying to do is to encourage firms to be able to make sure they deploy the latest patches as soon as they come out, understanding you first have to test them to make sure they don't break your environment, but to be able to make sure that that's something that's out there as quickly as possible, and that they're encouraged to deploy as appropriate. On the other hand is that we also have to help out, once again, on the information sharing side. So if somebody sees that they're being attacked by a certain area, then we need to pass that information so other people understand what the tactics and techniques that are being used by those bad guys overseas are being used against these systems, and so other folks can defend themselves. Everybody shouldn't be identifying for the very first time an attack that's been going on for several days or months or weeks, right? We need to get this information out as quickly as possible so people can take that, digest it, and deploy it as quickly as possible within their systems. We've seen this many times, and there were some good products that was put out by the FSISAC, tied to like the Zeus Trojan that came out, in which we had great information sharing during that time, in which we saw the Trojan doing certain things, sharing that information across so people can then defend themselves against it and be able to stop it from happening in the first place. And that's where I think there's a lot of value here. Now, if you're talking about overseas to some extent, what's being done on that point, well, that's something that we constantly engage with foreign governments on to be able to see how we can address those issues. We know that in some places they may not be willing to crack down as much, but we have to continue to have those conversations with those governments to see what we can do to be able to address that. But I mean, this is a constant ongoing thing, and I wouldn't necessarily say just foreign governments or anything like that, or people residing overseas. They can reside anywhere, and the mechanisms we do to protect ourselves is something that has to be done everywhere, and that's where we can really show a lot of value, I think.
And I would just add to that, I think, in addition to the information sharing, and a lot of these large companies are global.
Yeah.
So they do have fairly sophisticated capabilities in terms of monitoring their networks in multiple, jurisdictions around the world. So that information sharing becomes immensely helpful to respond to incidences. I think to the broader issue and challenges around creating a real deterrent to these types of crimes. And so that's really fits into the government domain, the law enforcement domain, in terms of working with their counterparties in other jurisdictions. There are some jurisdictions that don't view hacking abroad as a crime. You know, and so if we can try to move towards some sort of international norms of behavior, both in terms of what's criminal, but also what's regarded as cyber warfare. And then now we're really entering a whole new realm where cyber is being used, you know, as a vehicle of war and aggression or defense. And that's something that our industry and others are now being kind of pulled into by default, because adversaries are attacking our systems, these financial services systems, because they have a beef or a complaint with the U.S. government.
Sir.
My name is Motohiro Tsuchiya from Japan. I'm a professor of Keio University in Japan. I'm interested in the actual method of information sharing. So do you have regular meetings or make a phone call, or you have a website, or I don't know. So how actually you share information? Thank you so much.
Mechanics of information.
So there are many different levels of information sharing. One is meetings like this, right, that we have all the time happening all across the board. You know, we know that there are meetings of, you know, CIOs and CISOs and security folks that happen also. And so there's that informal information sharing, and we encourage that a lot. But the problem is that you can't have a circle of trust of all, you know, 20,000 financial institutions. And so we've looked to be able to figure out how to expand that. And so the FSISAC seems to really fill that void to a large extent, in which there's a mechanism in which information can be shared by an institution to the FSISAC. They then digest it, provide some analysis to it, strip off potential indicators, because a lot of this stuff does not need to be listed for an individual firm, right? A firm is under attack. It doesn't matter which one it is and why cause additional harm to that firm. They then take that and then create additional product to be able to share that all across the sector. And then there's also the way in which we in government share the information. We could share it either through the regulators, so the financial regulators, to get that out, to push it, or we share it once again with the FSISAC, and then they can take this information and be able to massage it in the way and provide additional analysis that's going to be very helpful to their member firms. So, you know, the issue is how do we, to a large extent, and then how do firms really want to receive this information? So I said, you know, at one point, you know, we're sending out PDF files or Word documents. We're definitely moving to a more advanced, in which it could be hopefully a machine-to-machine format, in which they can then take that packet that comes right out and be able to apply it directly into their system to be able to defend themselves. Kind of like the antivirus products work right now. You know, they get updated periodically. You don't have to even go out to get that information. But, you know, we're looking to see what's the most advantageous way for the firms, because at the end of the day, firms are going to have to protect themselves. We can provide assistance and help them target the use of their own resources as appropriately as possible based upon the threat and information that's out there. But I don't think we're going to ever mandate you must do this or that. You know, it's risk management. That's the way we look at from the financial side. So I don't know if
I'd also add to that, you know, all the above, you know, in terms of meetings, emails, websites, all that. But the one thing that's also interesting that our sector has developed, mainly through the FSISAC, is around coding of the information. So sometimes we'll be on conference calls and someone will say, I'm going to give you something that's an FSISAC red, meaning you can't share it, you know, with other parties, or it's an FSISAC orange or yellow or amber, whatever the term we use. Yeah, it depends on who you're talking to. So there is emerging a kind of an agreement around, okay, I'm sharing with you, but I'm going to put some conditions around that sharing of information so that you can be knowledgeable, but you can't use it, you know, in further distribution.
And that's where this, you know, the trust really comes in. Firms have to be confident that when they're sharing information, that it can be trusted. What's going out and what's coming back in. But that's also important not only for what you're sharing, but also what you're receiving. So do I believe, without having to, you know, question it 50 times, that what's coming to me is helpful and useful and something that's deployable? And so, you know, this has to be a big, I hate to use the word ecosystem, but to some extent it has to be that, in which everybody understands the security of the entire sector is important. Because the financial system works on trust. right? Your customers have to trust you, your trading partners have to trust you, you have to trust them. And so as we can develop this more and more to be able to get to a point in which everybody kind of understands and believes in it and understands why it's being done, hopefully even more and more information will be shared, which will hopefully make things even more secure.
Next questions?
Hello, my name's Harry Oppenheimer. I'm a student at New York University. I also do some work for your Asia group. I was hoping you would talk about transparency and specifically with the public, especially in something like financial services, which is private data. How are people going to know whether or not this information is safe in the future if there isn't as much of a dialogue between business and the public about it? And how do you sort of balance that tension?
Well, I mean, I actually think there is a fair amount of transparency in terms of, when you are engaging with a financial institution, there's all kinds of disclosures around how the institution will protect your information, what sort of security controls they'll apply. You have some options in terms of saying, you want to opt out, from different types of services. So that's kind of in place, and there's a lot that goes behind that.
There's also the notification of breaches.
Of course,
that financial services.
Yeah, so I guess I'm questioning the premise of your question a little bit.
That's more my question is about when breaches occur, how transparent should and will financial services be about the nature of breaches and what can be done to stop them?
Yeah.
Well, currently, financial institutions should and do notify their customers when they've been breached. But again, there's a little bit of a different dynamic if you're talking about the recent breaches. Those were not breached at the financial institution. So it's not the financial institution doesn't know necessarily how it's breached or why they're breached, just like the public doesn't until forensics investigations are done and information is shared. So if you're talking from a financial services or financial bank perspective, there are requirements that banks comply with and do follow, that when they are breached and when information is breached, that they must and do share that information with the customers. And oftentimes for privacy or protections, they'll typically, and you can correct me on your end if you're wrong, will send out letters or notifications directly to the customers that have been breached so that they're aware of it and they know going forward. And as a matter of fact, they did a lot of that even when they weren't the ones that were breached, but like retailers were breached.
Yeah, and I think it would definitely underscore what Lily said in terms of it depends on what the source of the breach was. So this most recent round has been with some of the major merchants. They have unfortunately been the victim of these attacks. So they're victims. So let's just put that out there. We oftentimes have this culture of blaming the victim, and kind of perpetuating that. So they're a victim, but it does impact the financial institution. So I know my bank, because I do shop at some of these large merchants, then reissued the card. And they said, as a precaution, we're going to take the hit, which it costs them a fair amount of money to do that, but they're going to reissue the card and give me a new card so I have peace of mind in terms of, but it wasn't my bank's fault in terms of it was not their source of the breach. And then the second point I want to underscore is when you have these types of incidences at a breach at whatever entity, oftentimes there's this cone of silence that goes over the investigative process. Law enforcement gets involved, you're doing the forensics work, so by definition, you can't share information with other parties other than very general information about perhaps controls you could put into place until that process is completed. So
Share certain information because they're still trying to get the bad guys or figure out the source, and if that information becomes public, it hurts the investigation. Right. But is that kind of the question that you're asking?
Okay. Oh, I'm not the moderator.
Hi, Danielle Perez, Information Technology Industry Council here in DC. This question's a little different than I think the last few, but I'm curious about the role of encryption and if the U.S. government has specific rules or regulations for U.S. financial services on if they need to use encryption, and if so, any particular kind, such as global encryption standards, or, I've heard different stories over the last year about whether Treasury or other U.S. government agencies require the use of encryption or not, and that's just something I'm curious about.
I don't know. I know Treasury is not a financial regulator, so perhaps one of the regulators may have some requirements on that. But from our side, we don't regulate financial firms. Our effort, tied to being the sector-specific agency, is to address and kind of coordinate and facilitate a lot of these bigger issues, and trying to work with industry to help identify solutions to the issues. There was a paper done many years ago on like two-factor authentication and stuff, but identifying, I think, any particular type of encryption or anything is not the be-all, end-all. I mean, I understand from firms is that it's a defense in depth strategy in which there has to be many layers, no matter what is being deployed, because there's no, I haven't heard of any technology person ever telling me, here's a silver bullet, you do this and you're secure. Because the bad guys are going to try to figure out how to get around that, and the more layers you put in that are robust and secure, it's going to take longer for them to hopefully be able to get through that. And what you want to be able to do is have them basically give up at some point, because it's not worth going through all this stuff. But I don't know, and I don't know, John or
I think
Lily know.
it's very much a risk-based approach. At least the financial regulators have always listed it as an important control to consider based upon your risk environment. So there's a presumption that you're going to have encryption, but it depends on how it's being deployed, what type of environment, what strength of encryption. There's also another concern is around the key management, and that's where you can get into some real problems if you don't have a good key management system in place. So the regulators have been fairly flexible about that. Some of the card association rules like PCI, they may be more prescriptive because they know the specific context around the protection of data either in storage or in transmit, in which they'll say you must adhere to these types of encryption standards.
Okay, so it does sound like the U.S. regulators then generally are more kind of performance-based requirements, like as opposed to a specific technology.
Their language would be around risk-based. They would say, if you're in this type of context, based on your risk assessment, and you're required to protect that information, then it may be appropriate to use whatever X level of encryption to protect that data.
But the key is, of course, is to have the appropriate knowledge to be able to understand what the risk is. And so that's where a lot of the information sharing goes, to be able to say, you can take whatever risk you deem appropriate, as long as you understand all the different information that's out there so that you can make the appropriate risk determination. And that's where this is going to be very helpful to make sure we get more and more information out.
Right. Well, if you're doing online banking, trust me, you're doing that through an encrypted channel.
Yeah.
Hopefully.
Yeah.
Frank.
Hi, Frank. Pollard Group. I was wondering, as we look at across the marketplace as investors, we're seeing some pretty incredible prices being paid for cybersecurity technology providers or service providers. And those prices imply phenomenal growth rates and spending across the private sector. When you look at the financial sector and now being prominently part of the critical infrastructure that's addressed in the President's executive order and the NIST framework and everything else, what information are you getting about the growth rates in spending on cybersecurity technology and services across the financial sector? Or do you have any thoughts about how fast that's growing?
I can tell you one thing, it's going up. That's very clear. As to how much, we actually don't know. It's always been a challenge within our industry in terms of how people calculate cybersecurity expenditures versus communications, general IT, training of employees, kind of the whole mix. So it's a question that we oftentimes ask ourselves and ask our member companies, and we frankly have been bedeviled in terms of trying to come up with any sort of reliable numbers across the industry. But anecdotally, my sense is that the numbers are growing pretty significantly over the past few years. But again, it's squirreled away in different budgets within organizations, so it's oftentimes difficult to actually tease out the actual baseline number and then the growth to it.
Time for one more question. Sir.
Yeah, Jordan Thomas with the George Mason University, graduate student cybersecurity. My question is, Pci picking up from what Ms. Thomas said and her question about, or her discussion about penalizing the weakest link. And my question is actually for Treasury and for any attorneys that may be out there. I think about how would you go ahead and do that, considering right now the NIST framework is a voluntary organization or voluntary requirements. How would you be able to penalize them from a criminal aspect rather than taking them to civil court where you could sue for damages? You know, is there any way that anyone that is going to be able to enforce that, whether it's Department of Justice, Treasury, or NIST itself? You know, how is that going to be able to do? How can you penalize the weakest link?
Can I just want to add that I didn't say that I want to penalize the breached party, because like John said, they are victims as well. So I do want to clarify that, but I do think that they should reimburse the parties that have to bear the cost of replacements. I did want to just correct you on that. And there have been some lawsuits that have been filed to try to get reimbursed, but I know that he asked you that question. Brian, go ahead.
So I guess, you know, the way in which, to a large extent, this issue is going to be addressed, we would think is based upon market-based forces. So, you know, are you going to select a vendor who is less secure than somebody else? And the key for the NIST framework is really to help firms be able to identify the way to be able to look at different vendors. So, for example, if I'm choosing between 2 or 3 different vendors, I can now use the NIST framework to say, you know, are you doing stuff in all these areas? You still have to evaluate the product, but perhaps, you know, are they actually taking cybersecurity seriously? Have they looked against the 5 categories to see, do they have programs and are they meeting standards in all those areas? We can see, based upon some, you know, conversations we've had with private sector, you know, if you're in the manufacturing space, right? I don't know much about manufacturing, but I know whenever I drive up to Pennsylvania and I drive through areas that are huge manufacturing areas, you see signs hanging out, we're ISO whatever certified. I don't know what that means, but I'm assuming that's important to the industry in selecting that vendor. And so if they're complying with that standard, it probably gives them much comfort in saying, we know that there's a certain level of security tied to whatever product that's done. Perhaps this is something that the NIST framework is going to evolve into, in which people will then start to say and brag about that they're complying with the NIST framework and that these are the standards that they're doing in this area to help be able to push out to firms of, this is what we're doing in these space, and this is how we can tell you we're taking cybersecurity seriously. But I think that to somehow mandate stuff from our side, I'm not sure how that would work to a large extent, and it really has to be market-based. So you have to be able to select the firms that you are going to think are going to be beneficial to your operation, because the risk is at the end of the day borne by the institution. And perhaps there is contractual language that could be entered into to say that, you know, firms who are selecting to be suppliers will do certain things. I mean, that's one way firms that we understand can enter into these kind of things to make sure cybersecurity is important. But once again, how people are going to use the framework, we don't know. These are just things we're hearing from industry that they're telling us that they're thinking about how to deploy it the appropriate way. And maybe then this framework is the right thing. Maybe it has to be evolved to some extent. Maybe it's perfect the way it is. But this is the whole process to say, how are we starting to look at cybersecurity more seriously, and how are we going to address it? Because at the end of the day, cyber is important, and we have to figure out how to make it more secure.
All right, thank you everyone for joining us this afternoon, and please join me in thanking our panelists for coming.
Good job.